Welcome to today's market report. European stock markets are seen opening lower on Thursday amid caution over the pace of the global economic recovery ahead of the latest meeting from European Central Bank. DAX future contract traded 0.5% lower, FTSE 100 fell 0.4%, CAC 40 dropped 0.4%. China reported 3.2% growth in its second quarter GDP year-on-year early on Thursday, as the world's second largest economy returned to growth after the first quarter's contraction of 6.8%. But the recovery is still uneven. Separate data showed China's industrial output beat expectations in June, but retail sales unexpectedly fell again, suggesting consumer demand remains weak. Although the quarter-on-quarter growth of 11.5% supports the V-shaped recovery narrative, which financial markets have been trading on, year-on-year growth of 3.2% is still the lowest since record began in 1992. At the same time, the COVID-19 virus continues to work its way through the global population, with the summer tourism season in Europe generating pockets of high-risk gatherings. Tensions between the US and China are also still simmering. Lingering uncertainty could prolong the recovery and make the asset price rebound fragile to a correction. Attention will now turn to the latest ECB get-together, although the central bank is unlikely to deliver another easing package so soon after June's largest. Analysts at ABN AMRO think the ECB will strike a more positive note on current economic developments, while continuing to express caution about the outlook further out. In corporate news, Novartis will be in focus after the Swiss pharma giant said it will offer medicines on a zero-profit basis to financially strained countries to help treating COVID-19 patients. Ladbrokes owner GVC tumbled after it said its long-term chief executive officer would step down. GVC Holdings fell 5.8% to the bottom of the FTSE 100 after it said Kenny Alexander will retire after 13 years at the helm, during which he built the company into one of the world's largest gambling businesses. FTSE 100 and FTSE 250 were both down, tracking decline across Europe and Asia a day after sentiment was lifted by hopes of a COVID-19 vaccine. Personal goods firms, miners and homebuilders were among the biggest declines in early trading. Recruiters Hayes slipped 2.6% to the bottom of FTSE 250 as it warned of lower annual profit amid a slump in fee income. Oil price weakened on Thursday after the world's major producers agreed to relax their record cuts to output, but losses have been mitigated by a sizable drop in last week's official U.S. crude inventories. U.S. crude futures traded 0.8% lower at $40.86 a barrel, whilst Brent contract fell 0.7% to $43.40 a barrel. Gold futures fell 0.2% to $1,810.65 per ounce. On the FX front, GBP USD has been on the back foot as weaker parts of economic indicators take priority. US retail sales, BOE speculation and coronavirus figures are of interest. The UK unemployment rate remained at 3.9% in May, an excellent level in absolute terms and beating expectations once again. The claimant count change also surprised with a drop of around 28,000 instead of rising. However, average earnings are now down 0.3% year over year, ending an era of pay rises. GBP USD is posting 0.35% losses to 125.45 as Thursday's 4-hour chart is showing bears are gaining ground. Support awaits at 125.35, which is where the 200 SMA hits the price and just below the daily low. Euro-dollar is managing well to keep business around 114 neighborhood despite posting small losses so far in the second half of the week. The dollar index is trading at the 96 level. However, it is expected to weaken about 2% to 94.1 by the second quarter of next year, according to Bloomberg. Goldman Sachs expected a weak dollar too in a report this week. This is today's market news. Thanks for listening. We'll see you next time.